Thanks, darling. Should be back on Ninja. And let me just pull over and just move that out of the way for a minute. Sorry about that. Just chat box out of the way. Let me just pull over the VIX, which will really highlight what we're seeing at the moment. This is on Trading View. This is the VIX on my VIX workspace. I've got in 1 minute here. Sorry, big pardon. Yes, 1 minute, 1 minute, 3 minute, 5 minute, and 10 minute. And what we saw in terms of obviously when the VIX is rising, I'm sure you already know this, but when the VIX is rising, then indices will be falling and vice versa. This was the rally we saw in the VIX. That was the reason that equities in general were selling off. Now we've seen the reversal in the VIX. The VIX has actually been down most of the day, so this was just, if you like, a minor reversal as such. Now we're starting to see it rotate back down again. And what are we seeing in terms of the price action on the indices? Certainly in terms of the YM, pretty much the same on the others. We've seen that rally come to an end. Now we're starting to see that reversal take place. And all I would say is if you are going to be trading any form of index, any form of risk asset class, you've got to have the VIX up somewhere on your trading terminal. Doesn't matter whether you're trading futures or whether you're trading on the MT5 with the US 30, whatever it is, it doesn't matter. You've got to have the VIX up because the VIX intraday will give you a heads up in terms of raw sentiment as expressed through the options market. And that will then be reflected almost directly, inversely, in terms of price action in the equity markets, in terms of risk markets. So that is why we're seeing that now. Just to give you a view, it's come to a bit of a pause. So it's oscillating at the moment, the VIX. It looks as though it's going to trade in a fairly congested range. Let me just pull it back again, just to give you that view again. I mean, if you look down here on the 10-minute, this is where it is at the moment. It's in a fairly tight range. So this sort of price action up here is just an oscillation of, you know, what has gone on down here pretty much. You can see it over here. We're trading tight. We had a lot of price action this morning on Globex, and the one thing I would say to you, whether you're trading futures, true futures, or whether you're trading synthetic, do not dismiss the opportunity to trade outside of the cash markets, because you'll find the price action is more measured, it's more even paced, it's less dominated by algos, and you'll find the price action will move in a much more considered way. And if you're starting out in this, the one I would suggest you start with is the YM or the US 30, because that is the least volatile of the three in terms of their volatility, if you will. Then it's in ranking, it's the least volatile is the YM, and the most volatile is the ES by a long distance, and the one that sits in the middle of the NQ. So once you've learned your craft on the YM, by all means start trading the NQ, but do not go straight to the ES, please, because you'll get cut to ribbons. Right, let's just head over onto a couple of other markets, because this is gold is interesting right now. Oh, sorry, before I do that, just gold has got some great moves going on. It's been going on for the last 2 or 3 hours or so. Terrific bullish move on gold. Again, pretty straightforward trading, supported by VPA. You know, there's nothing really scary here. And again, you can trade gold on MT5. You don't have to trade this gold future. This is a huge contract, but you can trade this just as well over on MT5. But let's just go to the currency charts, because the moves in terms of risk currencies, this is the Aussie dollar, but it's pretty much reflected across the Aussie complex. You can look at the Aussie dollar. You can see what's been going on in terms of the daily. This is really reflecting what is going on in terms of equities and risk. So that's the Aussie dollar. I can flick that over onto the Aussie yen, which will have a similar sort of picture. Even more pronounced, look at the candle down here. Big, big move. This is a huge move for Aussie yen on the day. You know, these are not normal moves. These are generally more typical of the price action for the Aussie yen. So it's a big move. And that is true across the yen complex. We're seeing this pretty much universally, certainly in terms of the CAD yen, Aussie yen, pound yen. Let's just have a quick look at the pound yen. Not so pronounced on the pound yen, and the reason for that is very simple, because we've had economic data. The pound is pretty compressed at the moment. It's under the cosh. So again, and that also makes the point. If you're trading currencies, then you've got to understand that these markets don't move in isolation. They don't all move together. There is local news which will affect a local currency. This is an example where local news is impacting the pound yen, whereas the Aussie yen and the CAD yen are very, very strong, being driven by sentiment. The pound yen is not one of those. So let's go back onto the gold chart, which is really nice today. We're bullish gold. And by the way, given what is happening globally and what is likely to happen, and I'm talking longer term now, in terms of inflation, what we are likely to see is gold really be one of the beneficiaries of that, because it is inevitable that prices for virtually everything will go up, food in particular, and that will drive inflation into the economies. It's already starting in terms of food prices. And if that is driven in any great way, then gold as a hedge against inflation is likely to be a beneficiary. And therefore, longer term, you would expect to see gold pretty bullish and a decent bullish trend develop. So I just wanted to make the point. But in terms of trading through this as a volume price analysis perspective, exactly the same principles apply. If you look at the chart here, we had this congestion phase. If you're a breakaway trader, if you have the patience to trade a breakaway tactic, it's a terrific tactic to trade. The reason it gets such a bad press is because traders who use it don't use volume, and therefore they have no idea whether the volume on the breakout is genuine or false. In other words, it is a fake out or is this a true move away? And that's the reason breakaway trading or breakout trading gets such a bad press. If you use volume, don't have that issue, because volume will tell you straight away whether it's a fake out or not. On this occasion, we had a volatility trigger, but we had very good volume under there. We might have been expecting to congest, it didn't. Next candle up is great, good volume, nice widespread candle, excellent stuff. Then you start to see the alarm bells ring. If you're long this, you would probably be closing out at this stage and taking some profit off the table. You might not be closing the whole position if you were trading multiple lots, but you'd certainly be taking a big chunk off. Why? Because you've got even higher volume being driven in here. You've got a nice big wick to the upper body. So there's a ton of selling going on in here. Now, it's not surprising given the speed of this move. We're on a 15 minutes. There's half an hour, so there's 45 minutes of price action in here. And we've gone up, $16, $17 an ounce, which is a lot and a huge amount of money, even on a single contract. So it's no surprise to see profit taking going on in here. Big operators closing out positions, selling out, possibly selling all or part of their positions. And that's why you see that particular candle with the big wick to the upper body and a ton of volume, the highest volume of the chart. What you're expecting thereafter is at least some consolidation, possibly not a full-blown reversal, but certainly a pullback, which you see. We do see some selling coming in. Then we start to see the market start to rally again a little bit. That looks a little bit weak, but then the next candle gives us a strong sense of the market rising nice and firm, nice widespread candle, good volume under it, not as high as these guys, but you know, fair enough, it looks okay. It doesn't look too scary. There's no wick to the upper body. Then we're into pause. Now it looks as though we're developing a little bit more weakness. You may not be able to see it, but we've got a wick here which goes up to 1728. So we've got a decent wick to the upper body. I've got the volume closed off. I'll just put the volume on. Where are we? Got another 5 minutes to run. So let me just put the volume on there, on the volume up, down. I just have it closed off because I've got so much data coming in. Put it on tick. There we go. Okay, now we can see the volume coming in under that particular candle. So this is looking a little bit weak. So again, it's a possible pause point coming up. Again, if you've got a position, you're in profit, you know, you might want to take some of that off the table. You might want to take 50% off or take 75% off and leave the other one to run. You can always jump back into this market. It's no big deal. But in terms of where it's going next, we've got a nice low volume here in terms of volume point of control. So it should get through there relatively easily because there's not much in the way of volume and certainly nothing in terms, certainly on the 15-minute chart at any rate, in terms of price action to cause that market to pause. Just have a quick scout round on the other time frames. This is down onto the 30-minute. Similar sort of picture, volatility candle on 30. So expect consolidation. We got it on the next candle, but we drove through this area here, which was nice. We've had a decent up candle here, nice, no wick at all, decent volume under there, and we're moving up into this low volume region again. But we've got this wick to the upper body here forming on the 30-minute, which has got another 18 minutes or so to run. So a little way to go on that one yet. Yeah, down onto the 3-minute. Similar sort of thing here, and you're just trading a faster time frame. And volume, VPA works exactly the same way. Look at this little run up here. That's okay, this is fine. We've got decent volume under there, and then we get this weak candle coming in with a little pivot to the top. So it's telling us, yeah, there's weakness ahead here. We've got high volume, and we've got a candle here with a wick to the upper body, and it's rolling over. But note the volume is falling away under these last two candles. So we haven't got a market that's collapsing in terms of price moving to the downside and volume rising. We've actually got the opposite. We've got volume falling. So the probability is that this is just a minor pullback. It's profit taking. It's a minor reversal. It's not going to change the sentiment, which you can see on the trend monitor, is still very, very bullish. And look at these two guys here. These are immensely strong. So if the price action was coming up to these to be tested, or is coming down to be tested from above, these are incredibly strong levels. They've been tested multiple times, 10 times in fact in the past, and held. So as a cluster there, if the market was fast moving, that would be a very, very important level to consider. The VIX is oscillating around, so I suspect the YM will be doing the same. Let's just go there finally to wrap up. Where are we? Where are we? There we are. There we are. Still trying to struggle up a little bit. The VIX is just sort of oscillating, trying to regain its bullish momentum. It's transitioned here to bullish. We're through back into bullish here as well. Not changed yet here, but it will do if we revert back to complete bullish momentum as we tick up. But again, you've got to remember on this slow time frame, on the daily chart, we've got this level here, which is now very key for the YM for the longer term, because that's been tested and it needs to be breached, both as an intraday level, which is always going to carry more weight than anything on the faster time frames, but it's still trying to break higher and push through that level in due course. VIX is just sort of ticking around, trying to go lower and push the markets higher. So there we go. I hope you've enjoyed today. Just to wrap up, if I can, let's just pop that up. What have we got? That's Forex Factory. Let's just have a quick scan down. And tomorrow, of course, is non-farm payroll. It's bank holiday here in the UK, so just be aware that the markets will probably be a little bit quiet, certainly in terms of Forex at any rate. And then, of course, we've got to the big one at 1:30 UK time. Just to very quickly go through where you can find all the bits and pieces. This is where you'll find all the indicators for quantum trading. They're MT45, NinjaTrader 7.8, and also TradingView. And we're working on TradeStation as fast as we can. That's TradeStation Global and TradeStation Securities. TradeStation Global is a relationship with the TradeStation platform and Interactive Brokers. So if you have an Interactive Brokers account, you can link it automatically through to TradeStation. You can trade off the TradeStation panels, have all the advantages of TradeStation linked with all the advantages of trading through Interactive Brokers and their incredible liquidity and the markets they offer. It's a very, very powerful combination, and we will have that up and running pretty soon. And then we have TradeStation Securities 10, version 10, which is you're running all the other applications and charting. It's a fantastic platform, got radar screen there. Going to be doing a lot of stocks and on that particular platform, so very excited. And we are working flat out to get that rolled out ASAP. Thereafter, we're probably going to be doing multi-charts. We've got some other work to do as well on TradingView, but we'll keep you posted on that. Finally, just to wrap up, this is the education program. I know we have some students here on our education program. A lot of traders who trade other markets don't pay attention to the Forex market, which we find a bit odd, given that it is the biggest market and it sits at the hub of all the others. It is the gateway where sentiment flow, risk and reward flows constantly. It's a complete Forex trading program, covers everything you need to know, includes the full set of tools and indicators. It's comprehensive, would be an understatement. There's over 200 hours of video and video podcasts, there's 13 PDF downloads, and as I say, all the tools and indicators as well. So there we go. We always love to hear from you. So if you've got any questions, please just drop Anna a line at anna@annacooling.com, or you can get hold of me, david@quantumtrading.com, and we will always be happy to answer your questions if we possibly can. Thank you so much for coming along today. Hope you've enjoyed it. Enjoy the rest of the trading session. Sorry, Line? We will be back on Tuesday. We have a day off tomorrow, which is nice, but we're back on Tuesday morning for the London Forex session. Enjoy the rest of the day and the rest of the trading week, and we will see you again soon. And thanks for now. Bye for now.